Hello and welcome back to Stock Market Weekly. I'm your host, Evan Medeiros. This is the show where we break down the notable moves across financial markets in 20 minutes or less. Make sure you are subscribed to our YouTube channel, hit those notifications so you never miss an episode, so you're always prepared for the week ahead. They go out every Friday, every weekend. You should see a new episode on our YouTube channel. Let's get into it. Today, it was a doozy of a week out there for the bulls. Squeeze, momentum, acceleration higher this week. All those things is what we got. And it's funny because last week we made a few calls, but one of the main calls for last week's episode was markets are due for consolidation. That's the way we sort of left things. It was time to digest, not necessarily pull back or go down, but just go sideways. And we couldn't have been more wrong. It was just an acceleration up this week. And that came off the heels of a weekend announcement where the US and China basically entered into a tariff truce for the next 90 days. And that was enough spark to at least take worst concerns, worst fears, to remove the gridlock that the economies are facing right now. So markets rallied. We also had support from softer CPI data, inflation data mid this week, giving a little more ease for concerns as well. So it was really just a lot of fuel getting put on a melt up situation where markets are hated, people are underinvested, and just not participating in this market. Now, here's the thing. We've covered a lot of ground now. This is really a rally for the history books. We go back and look at some charts here in just a moment, but this is now rivaling sort of the V-shaped recovery magnitude of COVID days. So we're going to look at some of those charts. We do feel like there is some complacency really starting to build up in this market right now. So we're going to talk about that in this week's video, along with lots of different individual stock charts, I think, in this week's episode. So before we get into it, I want to shout out our sponsor, IBD Investors Business Daily. They make the show possible every single week. Thank you, IBD. We've got links, referral links, intro offers to Market Surge and their IBD Digital. I recently just published a tutorial video on Market Surge to our YouTube channel, so check that out if you do subscribe, and you can catch up to speed on some of the cool features there. I've got a few more of those coming to the channel when I get some time. So without any further, let's get into this week's Stock Market Weekly episode. All right, here we go. We've got some charts in front of us, some custom charts in front of us. For those of you who tuned in last week, I had mentioned that I am reinvigorated into a internal sort of research application that I've had built. And I am now trying to make it more outward facing, trying to build out some more interesting views for us to look at in these videos, and even intra week, perhaps, if I can get it there. So it was a very productive, busy coding week for me on this project, and it's still got plenty of runway to go, but we're going to look at some more things from it this week, and then we're going to look at some TC2000 charts. So this week at a glance, markets here absolutely crushed to the upside. Top left here, Q's up 7%, nearly 7%. I mean, this is, again, in context here, after an already strong run, we are now accelerating up. Now, this should get a little bit of alarm bells in the back of your head ringing when you start to hear this or see this. At least it does for me. But we're going to enjoy the momentum while it lasts. Q's up 7, SPY up 5, IWM up almost 5, and the Dow was the laggard. Volatility index below 20. I mean, it's well below 20. It's sinking like a rock. It's 17.24. There is no more big fear in this market right now. Dollar index also down this week about almost a full point. And the 10-year treasury yield, despite the big rally, is not really budging too much here. It's still hanging around just shy of 4.5%. That, to me, again, slight little concern there that yields are remaining quite bid. If we take a look here at our sectors, you can see again just a full-on bull risk market here. XLK, technology, and consumer discretionary industrials, the top three performers, and really speaks to the risk in this market. On the downside, we had healthcare. This was a very volatile sector this week. United Health going through just quite a bit of turbulence. We can look at some of those charts later. Real estate, sticky rates not helping the situation there. And then consumer staples, which is, again, very defensive. And who the heck wants to own anything defensive in this nice risk-on bull stampede higher? Now, take a look at this view here. Aren't these beautiful charts? This actually took some time to get loaded here. So these are custom renders, which is our smart trend filter grid, right? This is really measuring our momentum in individual markets. So this is our spider sectors overlaid with our custom smart trend filter indicator. That indicator is available. It's for TC2000s for TradingView. We can get it on our website. But here is the breakdown of all the sectors. And you can see on the shorter term kind of momentum side, which we're labeling really momentum, every sector here is essentially exhibiting positive momentum except for healthcare. Real estate's a little shaky, and consumer staples a little bit shaky. But everything else is up, bullish, pointing to the right. And again, this isn't quite honestly new. Most of these sectors have been in kind of a bullish momentum state for the past 14 or 15 days. So this is really just seeing other sectors kind of catch up, and the market expanding out a little bit here in terms of sectors. Now, another constructive chart in my mind, this is a view that we don't quite look at too often. I'm sorry, the title needs to be updated, but this is essentially looking at the cumulative advanced decline line on the S&P 500. This is, very bullish. I mean, this is measuring individual stocks. This is essentially saying, let's take out the heavyweight nature of Mag 7 and the top weighted, heavyweights, and let's track the individual stocks equally. And if we plot this on a, AD line summed up each day, you can see that we broke out to new highs, frankly, in early May here, right? This is, again, a little bit of an early indication of risk appetite. So this is one of the supportive parts of, breadth or participation, just more broadly speaking. Now, what we usually look at is our 52-week highs and lows, right? And so the 52-week highs over here in the top left, this is Thursday's data. I don't have Friday's data on this yet because it won't populate yet at the time of recording, but, we're actually still hanging around 60, 70, 80. I mean, we'll see what Friday's numbers come in at, but I'm not that impressed, to be totally frank, about the breadth expansion or the 52-week high expansion underneath the market hood. Now, again, it goes to show how deeply we cut, and now we need to, make the run all the way back up, but still not that impressed, okay? Just to be flat out objective about this data. NYSE 52-week lows, I mean, there's basically none right now, so there's not too much to speak of. Now, these bottom two charts are pretty interesting. So bottom left here, this is the percent of S&P 500 stocks above the 20 SMA. Again, this is all of Thursday close data, so keep that in mind. But I mean, we're hanging out here around 80%. I mean, if I took this chart back, I mean, it's about as bullish as you can get, right? You don't really hang in this zone too often. I mean, it means the good bull run has happened. The positioning has happened. And if we look at the bottom right here, this is the put to call ratio. I mean, we were down, I believe this was Wednesday's data, down like 0.45. I mean, these are 2 standard deviation moves lower. I mean, these are extremely complacent readings here in the put to call ratio. So again, it doesn't speak to the fact that we have to go down immediately. Neither of these things suggests like, oh, okay, just short based on these, but it does just tell you the psychology in the market right now and just the positioning, the sentiment. And this is why I think the takeaway from this week's video is, enjoy the ride, but don't get complacent here, right? This is not the place where you want to take a few weeks off and just, let a bunch of risk assets sit in the portfolio, in my opinion. If we look at this chart here, again, this speaks to the extreme vertical nature that we've seen here in this market. This is S&P 500 21-day rolling returns. 21 days is basically just a month of trading. And we're going back 10 years on this. This sort of V shape from, arguably extreme oversold readings, but not as quick as we've moved up. But certainly, we were kind of hanging down here at the minus 10% area, and we have slingshot all the way up here. This is basically the fastest rally we have seen over the past 10 years minus COVID, right? So your COVID, got all the way up to about a 20% rally and even more extreme oversold. That was obviously a multi-decade historical event. This is not a multi-decade historical event, but yet it's, seeing right behind COVID a pretty sharp move. So again, this is all context kind of pointing us to clues where, yes, we've got good bullish momentum. Yes, it could continue, but just understand where we've kind of come from in this market rally. Now, I've got a couple of things I do want to show you for more slides, but let's move it to TC2000 real quick. Let's cover some price action, and then we'll come back to some different trade ideas in just a second here. All right, here we go. We've got our, we got our understanding of the big picture, kind of where we are, where we've come from in this rally. Now let's drill down. Let's look at some specific levels and some of these different chart views on different time frames. I've got the S&P 500 here, cash settled weekly chart, and you can see that we had a nice gap up and push weekly session. Now, if we go down to a daily time frame, once again, you see Monday's action was the majority of the most of the gains. Yeah, I guess that's fair to say. Let's see. Yeah, that's a fair statement. 3% up on Monday, 2% the rest of the week, give or take. And we basically grinded higher. There were no big pullbacks, no rug pull shenanigans, no retracements. I mean, we pretty much floated higher throughout this week. So S&P 500 taking a step back here. We definitely got the call wrong last week where markets were due to consolidate. But one thing we were still directionally kind of in the right area was that 5,800, 5,850. That was our call on this move up here. Even as far back as a few weeks ago when it looked a lot more uncertain, we figured, this market could get up, kind of eclipse and challenge and get just above the April kind of March pivot high here and get into this 58.50 area. And then overhead supply would start to kind of take hold. And that would be kind of where we would expect the rally to perhaps fizzle out. We're 100 points above that now. So when we look at where we are and big levels to think about, we essentially have this 6,000 psychological round number here in the S&P 500. It does carry some weight because we failed there previous times in late 2024, but then we really just have the all-time highs. We have the all-time highs around 6,100 or so, which is basically 3% above us. So I think most traders at this point are probably going to be targeting or looking at those prior all-time highs saying that's the target, that's the run, that's where we need to go. And so that's the path I think the market is going to try and get to. But will there, be too much complacency before we get there, right? Like that's the grappling competing forces right now. There's plenty of momentum. There is offsides positioning. However, there is that complacency, and I still think the geopolitical sort of uncertainties here, pausing tariffs, not actually having a deal written and inked. I mean, there are still things that this market will need to deal with down the line. So there are some, worries on the horizon. I think the market's gotten a lot of kind of its bullish news flow to propel it up. But there are now risks that it'll start to look at into the future, right? So we've got this competing kind of, uptrend momentum that's continuing, but the complacency setting in. So again, back to the theme of this week's video, it's, enjoy the ride, enjoy the bullish momentum. Don't get complacent, right? That's the way we're viewing things right now. So if you're involved in this market, you're trailing a stop, managing positions, taking some profits, maybe selling some calls, right? Covered calls against your positions. Like that seems to be at least the way we would view things from a trader perspective here, how we would manage it. I think, looking into next week, again, on the upside, the levels we would pay attention to would be 6,000 in the S&P 500. Then you're looking at all-time highs. I think on the downside, you're looking to take out a prior day's lows. You're looking to put a pin in this momentum and pop this momentum for some type of multi-day correction or some type of multi-day pullback. Okay, so that's the way we're looking at it right now. It's a tough chase market here for sure. If we look at the Nasdaq 100, I mean, you pretty much have a very similar situation. This was up even bigger this week. And again, when we start to look at the big levels and targets above, you're really going to just start to look at all-time highs here. as the next, logical big area of potential resistance, right? So that's the way I would look at the major markets here. If I take a look again at VIX, which we talked about briefly at the top of the show, but I mean, the VIX is sinking fast, almost faster than it went up, right? So, I mean, again, when we think about some complacency, I don't want to sound like a broken record, but I want to point you to the evidence here, and this is part of it, right? You're just seeing a total disregard for protection. We did just have monthly OPEX on Friday, so we got kind of a new cycle, so to speak, on Monday. So let's see how the market treats things. But VIX right now, 17, feels cheap, but again, it's tough to want to step in front of this rally. GLD. So one of the things we did say last week, which we did get correct, was, kind of a top here forming in gold, right? That was one of our calls, was a lower high kind of forming, or a double top kind of failed to retest type of situation. So we expected gold to pull back. It did, 4% down, pretty good size pullback this week. And if we go to a daily chart here, I mean, it's starting to get more interesting. I figured we could get down into the high 280s, low 290s. So we're getting close to maybe destination, but we're still up in gold, right? Let's remember 21% year to date. So it still feels like there is going to be a bid, or still folks wanting to get involved in this and rotate capital to GLD, but maybe they're looking for more of that 10% pullback off of highs, which we're not quite there yet. So GLD in kind of pullback mode now. Keep an eye on it here. I still think it sets up for an interesting trade, perhaps later in the month, or into June for gold. So that, I think, covers all the majors. I wanted to go back to our slide deck and look at some individual stocks. So this is kind of a new model that I'm going to be talking more about to surface kind of existing trends or actionable new ideas. We're going to look at both today. And again, this is all sort of work in progress. I'll try and clean things up more. Again, still think they're beautiful looking charts. But this is kind of our trend momentum model that we are working with. And these are the top 6 strongest stocks on our universe, right? On our coverage universe. So we cover basically 80 stocks, 90 stocks or so. And these are the top 6 that are coming up as the strongest. A lot of these are going to be names that look pretty familiar to you. You got Palantir, you got MSTR, Strategy, Robinhood, CrowdStrike, GE, Vernova, and Carvana. So these are our top 6. Now, again, these aren't go out and buy now type stocks. Most of these have already been in established uptrends for multiple days, in fact. So you can see our coverage on Palantir flipped bullish 23 days ago at $92, right? So this has already enjoyed a pretty good run in most of these stocks. Now, I haven't owned them all personally. Strategy is mostly the one I had been trading and been in since signal price, or maybe even earlier. And that has been a good run here. But these are kind of the top names that we would now look for pullbacks and look for opportunities to get back involved in. Right now, these are, again, kind of our strongest names. If we look at, I don't have so yeah, we're going to have to go to TC2000 here, and I'm going to just list them out because I don't have neat orderly views on them right now. But if we want to look at more actionable names that are coming up on our software here, on our actionable list, Spotify is one that is showing up right now as kind of an interesting turn up. You can see that this does coincide nicely with a potential breakout. Again, you have to keep these stock ideas, in my view, in mind where we are in the market environment. So again, if you do think we're going to get a little bit of a pullback here, then we're kind of waiting and sitting on these bullpen of stocks to perhaps get involved on maybe a pullback or a little bit of a dip. But Spotify here looks interesting to us. This is kind of new and actionable. Capital One Financial looks new and actionable to us here. This might have been earnings. I'm not sure why the big heavy volume traded today, so I got to catch up on the news flow there. VRT, another one that is starting to form here on our actionable list, and we'll look at one more, Snowflake here. which is also starting to shape up for us if we can start to get some continuation and some momentum. So those are a few of the ideas, strongest names, kind of things that are starting to flip more interesting on our bullpen of longs. And on the downside, so if you're looking for short ideas, if you're looking for things, if this market is going to start to correct, we've got Apple here on our kind of short biased list. Apple has, obviously been in the news for lots of different things. It's tight and sideways here, right? So this is actionable one way or the other, right? Keep an eye on the setup here. You've got nice, tight, overlapping price action. You're stuck in between two gaps, really. You got this gap up here and you got a gap down here. So this is a nice squeeze play no matter how you cut it. Our bias is to the short side, but if this market continues up, then you better believe Apple's going to continue with it. So Apple technically on our short idea list, but no trigger, no trade. Google's another one that's on our short idea list. Again, it's trying to poke its head up. It got rejected here, kind of making new highs today, or attempting to make new highs. It closed up, but not the prettiest candle. So that's a short biased idea. Marvel Technology, another short biased idea here in the semiconductor space. And I'll give you two other quick ones. Reddit is the third here, short biased idea, and XYZ block is another one on our short list. So this is going to be a little bit of a new segment here that we're going to start to spend a little bit more time in, is just kind of, actionable or opportunistic kind of trade idea plays or things you just want to think about. Again, nothing's a direct recommendation. I have no idea your time horizon, your risk tolerance, how long you plan to hold things, but this at least gives you a framework as to where we are in the market cycle, how bullish are we on the overall environment, and then can we drill down to individual stocks. And I hope to bring you some more interesting views leveraging our software, which will come to light more and more. So hopefully you enjoyed the new charts. Hopefully this was helpful for you. We do these videos every Friday. If you like it, do like the video, subscribe, all that fun stuff. Hope you had a good week out there. Weather's getting warmer out. So enjoy the weekend. Have a great 2 days off, and we'll see you back here in a next episode. Take care of yourself.